Hello everyone, this is Tina, guest market analyst from FPG. It will be a busy week for the financial market this week, including 4 central banks' rate decisions, and the US is due to release its CPI data for November. In the following video, I'm going to talk about major currency pairs, market trend accordingly, including the Australian dollar, the Canadian dollar, the euro, and the Swiss franc. Lately, there's notable trend that the US dollar has strengthened against the commodity currencies. At the same time, the euro stabilized against the dollar. Now let's have a look at their technical charts. The first one is the Australian dollar against the US dollar. The Australian dollar has been weakening against the US dollar since October, and the downside momentum is pretty strong, most likely to extend its weakness. Even though there might be a slight rebounding movement around here, the near-term support could be around the low point in August. However, due to weaker than expected Australian economic data lately, the Reserve Bank of Australia might bring forward its rate cuts and send the Australian dollar down again to its previous low back to October 2023. The next one is the US dollar against Canadian dollar. On Friday, following the strong non-farm payroll data, the US dollar has strengthened significantly. The reason behind the weakening Canadian dollar, one is that Donald Trump said he would impose 25% tariffs on Canadian goods, and second is that the oil price has been sliding. Fundamentally, the Canadian dollar will likely extend its weakness against the US dollar. It has rebounded from the near-term support area, so the pair will likely extend its upside momentum with a near-term support around the 20-day moving average. And if I use Fibonacci expansion, the potential long target could be around 1.43 at the retracement. The third is the euro against the US dollar. The euro has been stabilizing against the dollar around the recent low, and last week it's closed above the 20-day moving average, suggesting that the euro could extend its rebounding trend against the dollar, especially MACD taking up from an oversold territory. The key resistance area will be still around the Fibonacci retracement, 1.06. Once it's breaking up the day high of last Friday, it could continue rebounding. Despite the political instability, the stock markets in Europe, especially the German equities, has hit new highs repeatedly, signaling investment funds could shift to Europe and expect that the European Central Bank would accelerate its rate cuts. However, this week, the bank is still expected to cut interest rates by another 25 basis points. The last one is euro against the Swiss franc. In the long-term trend, this pair has been moving in the downtrend line. Last week, it's closed down below the 20-day moving average. The US dollar could continue weakening against the Swiss franc. The pivotal resistance could be still on this downtrend line. And this week, the Swiss National Bank is expected to cut the interest rate by 25 basis points. However, the currency is seen as a hovering asset, which could continue to support its upside momentum. So this is today's technical analysis video. Thanks for watching. See you on Thursday.